So I've created this spreadsheet to help you understand the UK residence and domicile status for 2021. If you're coming to the UK, what tax should you consider? And actually, this is appropriate for people that have been in the UK for some time, but they want to know about their residency status and remittance basis tax charges. So are you better to be taxed on your worldwide income or just taxed on your UK income and pay the remittance charge? Well, that's what this spreadsheet aims to do. So the assumptions, purpose, disclaimer, please do read that. Very important. If you're already watching this video, then you won't need to click here because you're watching me. Here we are. Please note that any cells that you see, which are blue shaded with white writing, you can enter details into that section. But please do not enter any details into the sections that are white with the gold trim, because that's already formula based. Please note, if you've paid £9.95 for this spreadsheet, then don't forget that we do have a teachable platform full of useful videos, documents, and tax calculators which are embedded into that solution to help you understand your tax position and to reduce it. And I'm also live every Wednesday to take your tax questions. Now, underneath here, what we're looking for is your details, and you'll notice I've entered some information into here. So which tax review year do you wish to review? There's a drop down list box just there, and what I'm going to do to make that easy for you is just put that in blue. The tax year runs then from the previous year, so it goes from 6th of April to 2020 in this case to the 5th of April 2021. Please note that in your country, wherever you're coming from, or your host country may be different. For example, in America, your tax year will be the 1st of January all the way through to the calendar year end of the 31st of December. If you're from Hong Kong, you follow the same tax rules for UK. Now, what this basically means is, when did you move to the UK on a full-time basis? You may have moved in many moons ago. So please make sure that you enter that date. Can you remember when you moved? You'd have to check your records to get the exact date. The next bit is, are you a member of are you a British citizen or a member of the EEA? If you are, you do get a personal allowance of $12,500, which is amount that you get tax free. And this spreadsheet calculator will help you do that. The next section is, how many days were you in the country? Now, we're going to assume that we've been in the country for 300 days. And if you have a home in the UK, so we're going to assume that you have a home in the UK, but you can choose no. And indeed, do you work for more than 35 hours per week? Now, if you're a property investor, you might say, actually, yes, I do work for 35 hours. There's no harm. But it's mainly talking about employment. So if you're working in full-time property itself, then maybe that's not employment. So you may have to choose no in that regard. But what this will do is say, well, how many years have you lived in the UK? You'll notice that it said 4 years. So what I'm going to do is, just to test this spreadsheet out even further, I'm going to say that we moved into the UK in 2010, which means that we've been in the UK now for 11 years. What we want to now do is understand what is your taxable income in the UK. So this is total taxable income. This includes your employment income, self-employment income, the interest you receive from any investments, dividends that you receive from any shares, and your property profits, anything that's in your personal name. So we'll enter £35,000, and what we'll say is we've also got £80,000 of money that's earned from overseas. And we're going to bring that over to the UK. So in fact, what we'll do is just put that as £50,000. Now, what I want to show you is an extreme circumstances whereby you are in the UK, but you've got lots of earnings from overseas and you're not remitting it back. So in this case, we're going to go through an extreme exercise of saying we've got £500,000 worth of, this is sterling, of course, you'll have to do some currency exchange, £500,000 worth of income worldwide, which is excluding the UK income. So the next stage we are now going to look at is residency test. And you'll notice that it's all shaded in white, so it is automatically populated for you. And basically it's using the inputs from above. So have you been in the UK for more than 183 days? If you've entered yes, you are automatically going to be deemed resident for UK tax purposes. Do you have a UK home that's not rented out? So again, presupposing you've been in the UK, maybe less than 183 days, but you've got a UK home. Again, that would be subject to being a UK resident. And do you work for more than 35 hours per week in the UK? We've entered no, but ultimately it's looking at all your circumstances to say, well, actually, on the whole, you are UK resident. Okay, so the next section we're now going to look at is your tax bands. And what you'll notice here is that we've got three strands. We've got the UK income going down this side. Then you've got worldwide income, and that's excluding your UK income. So it's just looking at your worldwide investment income or employment income. And then we've got the remittance charge. So this is based on the amount of money that you wish to remit into the UK. What you'll notice is that that £35,000 is based on what you entered here in terms of how much money you earn in the UK. Then we've got this £500,000, which equals the £500,000 here that you've entered, but it's putting it into the relevant tax bands. Please note that when we're looking at the relevant tax bands, what it's trying to do is look at your income tax position first, and then your worldwide income and your remitted income. Now, we have to do this because we've got to look at your personal allowance, your basic rate tax band, and higher rate tax band, and then finally your additional rate tax band. Clearly, we need to take that into account first, and then we need to look at the income tax for worldwide income or the remittance basis charge. And that's what this does. It basically looks at the UK tax of £4,500 based on an income of £35,000. But if you are going to be taxed on your worldwide income, because that's what you declare, then you will have a tax charge of £219,500. But if you opt to be taxed on remittance basis only of that £50,000, you will still be subject to tax, but it's a much reduced tax liability of £17,000. Now, what the next section is to do, which is to help you understand, should you use the remittance basis charge or be taxed on worldwide income? And what we need to look at is the fact that we've got UK worldwide income, excluding the income on a remittance basis. So we're saying, rather than tax me on worldwide income, let's first look at the tax charge on a remittance basis, which is £17,000 on that £50,000. But there is a remittance basis charge. Because you've been in the UK for a period of time, the HMRC will automatically put a basis charge in there for you. And if that is over a certain period, it's £30,000. If you go over the longer period of time there of 11 years, then it's going to be £60,000. So that does increase in value. But even then, your income tax charge on a remittance basis with the basis charge would be £47,000. But if you're taxed on worldwide income, it would be £202,500, which is significantly more. So you are better to use the remittance basis charge rather than accept to be taxed on worldwide income. And that's what that basically says here. So feel free to go through this spreadsheet and go through all of the tax charges there. I have put some useful articles that I think is useful for you and some videos as well. So hopefully this is giving you some indication of when you come to the UK, how much tax will you be paying on your UK income, your worldwide income versus a remittance basis charge. Make sure you get some tax consultation on this piece. It is very important. In fact, I would say vitally important to make sure that you make the right choice. You could be paying far much more tax than you should be if you make the wrong decision. Until the next time, my name is Simon Misiewicz from Optimise Accountants. I'll see you again soon.